Hey, everybody. Thank you so much for a wonderful 2025. This is your last real estate market update. We pulled together a fantastic year. We made it through, had a great year relative to the market. Very happy for all the support and just grateful. So, thank you. I thought it could be fun with this update to just show you where we've been and where we are now, what's changed from start to finish in the year. So, let me share it with you, okay? Here we go. Okay, so at the beginning of the year, the number of homes for sale was pretty low. It was about 4,000 homes on the market. It rose dramatically this year. Inventory went up to 6,300 homes active in July as the peak. That's almost the same number as were on the market in May of COVID when everybody was panicking. You'll also notice this precipitous decline. This is what's called delisting, meaning homes didn't necessarily sell, or maybe they sold, but they also came off the market with failing to sell. So I mentioned this in my last market update, but I do expect that in the first quarter next year, we're going to be right back up here for inventory levels because a lot of these homes did not sell just because there's less actives. So I think they're going to come back on the market. Next up, from closed sales, the last 3 years, we've been selling about 1,900 homes per year. This year, it was closer to 1,800 homes per year, so down about 6%. And that's fairly standard. Or let's just say that's not as strong as it needs to be for the amount of homes that are for sale and going to be for sale. So I do see headwinds in terms of price appreciation for next year. But it also, on the converse side of that, that's for sellers. For buyers, you might actually have a buying opportunity, which is solid. I like that. Well, what about interest rates? Well, at the beginning of the year, interest rates were right about 7%. And the Fed has made cuts throughout the year, and the bond market has improved, shall we say, in terms of interest rates. And now we're between six and a quarter and 6.5, depending on your loan scenario. If you have an exceptional scenario, maybe you can get down to low sixes. So that's where we're at in mortgage rates. Today, the Fed cut another 25 basis points. That's short-term rates, not necessarily mortgage rates, but that is the rate at which banks can borrow at. So that's a good thing that I'm hopeful that that means that rates will continue to come down. I really want mortgage rates in the fives, and that will really keep the market humming. If they don't get into the fives, again, that just puts a headwind on terms of price appreciation. One thing the Fed said today was that they may only be looking at one rate cut next year, but they are not particularly, they're not setting the expectation that it would be more than one rate. So that I think is stating that we might be at the bottom of mortgage rates. And if that's the case, then uh, we can expect similar numbers as to what I just shared. So if that's the case, let's see how real estate held up as an asset. And I think the best way to do that is a side by side with the stock market and say, should you put your money in the stock market or should you put it in real estate? How's everything doing? So I'm going to try and be as unbiased as possible here. Now, if you look at the stock market, and I'm using the S&P 500, it's up 17% year to date. That's a phenomenal year. That's very strong. Most of the estimates tend to range between 8 and 10% per year is considered strong. So that's very good. If you look at the stock market over the last 5 years, it's up 88%. It's almost doubled, which is incredible. So the stock market has had one of the best runs it's ever had over the last 5 years. And my 401k is happy. I hope yours is. Having money in the stock market has been a great thing, a wonderful thing. So I went ahead and did the side by side anyways, knowing that the stock market's been crushing. So I hope you appreciate that. Fair and balanced, right? Uh, Here's what it looks like, okay? Here's your 100,000 bucks that you invested in the S&P 500 in 2020, 5 years ago. It's up 88%. Your 100,000 will have grown to 188,000. That's 13.48% per year for 5 straight years. Remarkable. Awesome. Great things. But what if you had put that 100,000 into real estate, into an investment property or an owner-occupied property? Well, the property values have not gone up by 88%, they've gone up by 57%, so less. But what does that mean for you? Well, the money in the stock market, your gain, your returns would have been 88,000. In real estate, it's 427,000. It's more than four times. And how can that be? It's 33% per year, which is just astronomical. And what this is the concept of leverage. It's one of the economic benefits of real estate that I try to teach people and say the benefit of real estate is your 100,000 gets leveraged up to the value of the investment. And so your 100,000 in real estate over the last 5 years will have grown to 427,000. You will have 4x'd your money in the stock market, still incredible, still one of the greatest runs of all time, will have almost doubled. So for my money, I tell people it's wonderful to have money in the stock market, but if you don't own investment real estate, you are absolutely costing yourself a ton of money. And this continues to be true. It's just not a fair game. The rules are a little bit different for real estate as they are for the stock market, and you need to take advantage of that in your life. So, this is my lesson for the year. Take it for what it's worth. I'm still long real estate over the long haul. It's too good of an asset not to own. And if you have any questions or want to make an investment next year, I'm here for you. I'm your guy. I wish you the best. Happy holidays and to your success. Thanks.